Okay, Mizam waited long enough. I think let's talk about those two, which is basically the what we touched on a little bit already, the positive cash flow one that we got earlier, and also the question, how do you basically get value from the property if you have a negative cash flow, right? And this leads me actually to what Mizam was writing right here in chat. Is it really beneficial to buy property for investment instead of investing in ETFs or stocks, considering ETFs will return at least 5%, whereas in property 2 to 3% with tenant issue. So tenant issue, he's actually right about. So property is definitely more work. That's certainly true.
Yeah, there are, but if you're having the right partners, like if you have
so the perfect scenario, of course, what all three of you mentioned, basically, right? The two comments here and Misam too. The perfect scenario would be, and I think we can all agree on this too. You invest absolutely nothing, €0, and you get instant passive income. Right, because then everybody knows, okay, this is where value is created, right? I invest 0 and out of nothing, I get money on my bank account from the tenant, because the tenant pays me more than mortgage and insurance and whatnot, because you have to pay a lot more than just the mortgage. But that's not the reality. That's selling you a dream. Who AA had a dream. That's basically a dream, right? The reality is you have an upfront investment. We talked about it. Down payment maybe, but certainly closing costs, and you will have a pre-tax negative cash flow. After tax, it may be different depending on your tax rate, but at least pre-tax, and that's what many of you guys are always talking about or have in mind, that you get more rent than you have to pay the mortgage. That's what most people, I think, would consider with positive cash flow, and that's most certainly gonna be negative. 4% interest, we talked about it, or 3.5%, it doesn't really matter, and 2% principal is 6%. Meaning, if we're just looking at how much does the tenant pay and how much do you have to pay for the mortgage, then we need a return on rent of at least 6%, which is pretty high. So it definitely doesn't exist here in Munich. So now coming to ETFs, is ETFs then the better option? So if your ETF returns 5%, that's of course different if your ETF grows in value by 5% and the property returns 2 to 3% in return of rent, right? Then we're comparing apples with oranges here. What we would need to compare is if the dividend yield of your ETF, because that's what the ETF returns regularly. At least that's the closest, because if an ETF is worth €100 and pays €1 in dividend, the ETF value mostly goes down, right? Or the stock value goes down. After tax dividend date, Ex-Dividenden-Tag in German. The ETF growth of 5% is what you mean, is the property price growth. So then we're comparing apples with apples here. And I think 2-3% is also what an ETF would pay. But still, the comparison stays, right? And then you're saying ETF returns something, so positive cash flow, property negative cash flow. So I'd rather do ETFs or stocks. That's what some people say. And I haven't thought this completely through. I'm actually planning a video on this. Maybe you can tell me if my thinking is wrong. I feel a little bit uncomfortable saying this because I haven't thought it through in detail, but I think my logic adds up. If you invest in an ETF, €100 a month or something, with a 2% return on rent, dividend yield, because the ETF value can go up and down, right? Like a property value. So we would be looking at, in terms of cash flow, what you want, positive cash flow, is only the dividend yield. But if you invest €100 a month or 500 or 1,000, it doesn't matter, and you get 2% in dividends, then it's also negative cash flow. Because you invested 100 and you get €2 per month, and you get €2 per year if it has a 2% dividend yield. So that means what everybody hates in properties, but what we're saying is a reality, is actually the same reality with ETFs.
Yeah, that's true. But also the properties is, even if you are in a minus, let's say you're paying a small additional amount, it's not forever. Obviously, you have to perform a rental increase, which you can do every 3 years. By law in Germany, you can go up between 15 and 20%. So when you rent out your property, usually rent it out with a Staffelmietvertrag. So that means it's the easiest way. You don't have to do anything, so it stays really in the contract. After 3 years, we're going to increase, and if that same tenant is in the property, they will automatically pay in 2026 the 15% more, okay? And then by then, you're going to pay less, or you're going to be neutral, or you're going to be even in cash flow positive, okay? So it really depends how much money you're paying. And I always believe that real estate investment is a long-term investment.
Yes, for sure.
Probably ETFs and everything is could go faster, right?
Yeah, it's midterm,
Yeah, midterm. But real estate is really long-term. Really, after 10 years, you're really going to see where your property is. And this is why we say, do it for 10 years, do a interest rate 10 years, and then you can still decide what you're going to do.
Yeah. Interest rate, which is tax deductible.
Yeah.
And the profits that you make with ETFs, we had a video about this, I think last week or something.
Yeah.
With the preliminary investment tax, that if you don't have ETFs inside a pension fund, if you actually have them only in a brokerage, now every dividend is taxed above the 1,000 euros. You pay 25% capital gains taxes. When you sell the ETF, it's taxed. It's always, you pay so many taxes on money that is taxed already. Because if I invest 100 euros, it's already taxed money.
Yeah.
Right? Yeah. So you pay capital gains taxes twice and 3 times and a lot more times. And with the property, you get tax benefits.
Yeah, you got that.
And then it's the question, do you prepare your after-tax return or your pre-tax return? And I'm more a fan of looking at my holistic financial situation, seeing, do I have a high tax rate? Do I have a low tax rate? And of course, the more money you make, the more you're qualified for properties anyway, let's be honest.
Yeah.
And the higher your tax rate is, so the more I would lean to properties make a lot of sense.
Yeah.
Not only properties, but have a mixed portfolio. Diversification, which is key to investment success. I say this in almost every video, and I think I can't stress this enough.
Yeah, no, I would do also, like, how beautiful it is having multiple incomes, like either ETFs, funds, real estate. Why focusing only on one thing? Just do it, or we also have the tokens, right? So also
tokens,
great.
Exactly. Yeah, they're your cash flow positive. Yeah,
that's true.
And you can combine it, right? So I have, with the rental income, I have a savings plan into ETFs.
Yeah.
So because I don't need the rental income, so it's immediately invested.
Absolutely.